Okay, cool. While we are waiting for Ludwig, I think can start a little bit. Yeah, sure. Okay. Thank you guys for being here. Welcome to the 11th episode of MEV Space, which brings together the sharpest minds in crypto to dissect the evolving MEV landscape and beyond. So this is the second part of the data on Ethereum series. In MEV Space 10, we asked the speakers like who owns Ethereum's most valuable data. So we heard about like data asymmetries in private order flow, and interpretation layer is a scarce good, and blind spots in real-time observability, and protocol limits around censorship resistance and validator-builder balance. And we all have a share, which is without better access, better modeling, and better accountability, we are flying half blind. So today we are going to look at where we are and what's next. Um, I want to start with a question like, who are you? And while everybody introduce themselves, and there will be a question which is, what are the hard to measure high impact data streams in your day-to-day work? How about we start from Jake?
Yeah, for sure. Thank you. So yeah, I'm Jake. I'm a research analyst at Masari. I'm on the protocol services team. A quick background, I studied philosophy in university. I was an investment research analyst at a AI crypto research firm. And then after that, I was a venture analyst at a crypto VC. And now I work at Masari. And to answer the hard to measure high impact data, in my day to day, I find something super hard to quantify, but very impactful is culture. So, for example, you can track developer commits or TVO on dashboards, but trying to quantify or measure culture, which is the memes, narratives, and the sense that people want to build and identify with an ecosystem, that's what's most impactful. I think that's what drives stickiness. And we've seen people try to measure it with mind share metrics like social activity, X engagements, but that's usually a lagging measurement. Usually we see like culture moving first and then numbers following.
Uh, well, culture, yeah, absolutely. That's very intriguing. Um, yeah, next we have Hugh Dobby.
Hello, everyone. I'm Hill Dobby. Just to introduce myself, I am head of data at venture capital firm Dragonfly, and I've been in the space working on doing publishing dashboards and all kinds of things for at least 3 years now. And yeah, I'll keep doing that. But what's hard to measure? My personal struggle has been uh, tagging generally. There's all the decentralized protocols and everything that's willing to be published is fairly easy to tag, but once you get into centralized, when there's any part of centralization, that could be centralized exchanges or anything like this, it gets much harder, and it gets harder and harder over time. My experience with staking, for example, where I've tried to maintain, a decent portion of staked ETH as tagged. But the more I do that, the more I'm also showcasing how I do that, and therefore new actors aren't necessarily willing to be part of that tag list. So it's a hard one to fight, but and there's also obviously a fine line between doxing and tagging what I believe to be custodians or centralized actors that play a major role. I'm more going for the latter than the former, of course. But yeah, so any help on this is always welcome. If you have anything to share that you think I can plug into my data set so that anyone can pull from, my DMs are always open.
Yeah, very cool. Centralization is definitely one of the biggest concerns now. Like I read yesterday, like there is this one solver called Butter. Its share has already over 50% of cop swaps overflow. Yeah. Okay, next we have Danny.
Hi everyone, this is Danny. You can hear me, right? Okay.
Yep. Totally.
Okay, cool. Yeah, my name is Danny. I used to be a data scientist in various DeFi projects. recently moved from Flashbots, where I was focusing on understanding MEV order flow data, to a venture capital as well, Pantera, as a research director. Mostly focusing going to be around like data empirical analysis and helping our investment team and also the portfolio company. I want to say, to answer the question, I have a similar angle with Dolby, where like labeling data are very important but hard to get. In the particular like order flow case, when we were building orderflow.art at Flashbots, which was basically aiming to map out how the whole supply chain works from user entry point, from your DEX front end, wallets, RPC, down to block builders or like a liquidity provider, AMM, or market maker. I think a lot of those routers label are very valuable insights for basically identifying if it's bot volume or actually retail volume. So basically toxic or non-toxic, not toxic, or other people call it like informed or uninformed, to actually be able to understand what's the real traffic in the user's front end. And the other part would be like market maker labels. It was very useful information to understand if the liquidity was private market maker liquidity, RFQ liquidity, or was it like AMM. So yeah, those are like the very interesting part, but it's hard to get. On that whole, how to say, aspect, I think also another hard to get data that's high impact is like the actual real auction data or the solver action are holding. So basically, like now in the DEX landscape, there's a lot of this, I guess, like solver based DEX similar to CowSwap or One Institution or Uniswap X. They receive the solvers swaps or batches data, but it's right now, as you guys mentioned, it's centralized in their backend, and this data is nowhere to track. I understand it's hard to share this data for the privacy concern. They don't want to expose all the solver or searchers like strategy, but it will be actually useful for us to know who actually has the best pricing. So that's my answer, maybe a rant about the order flow data. Another quick one would be, since I moved to Pantera, we actually being one of the, I guess, leading venture who's been investing in that, so digital asset treasury companies on the stock market. And now I've been like starting to get digging into the stock market data, and man, oh my God, this is really hard because all these are in the SEC filing, so it's all actually text based. And then you almost are doing like NLP work, trying to like regex all these information when they expose, say, oh, today we increased some our ETH holdings or like Bitcoin holdings, and they don't even disclose, oh, we issued a new this amount of stock shares until they are substantial. So like you have to guess how much stock shares are out there, and all these are just like disaster. And like it actually made me more grateful about blockchain data. It's like more real time, more transparent, and everything. And I was like thinking with the team like how can we improve there for the standards, but curious anyone's thoughts as well. Long answer.
Yeah, it's funny on the DAT side. I came over to BTCS before DATs were too like mainstream, and so getting into all of the public company side of things has been really fun. But what's painful now is the other DATs that are making decisions on how they account for some of their assets that are um, basically setting precedents, because there is no precedence right now and for some of these things. And they're doing it in ways that are kind of misleading. So even if you look at like SBETs or SharpLinks, liquid staking tokens, they mark them down as an impairment. So like on their SEC filings, they'll show that they have like a huge loss on their liquid staking tokens, but they bought them at an average price of $2,800. So they've actually made like over $1 billion on those tokens. But because of the way they're accounting for them, it shows as a loss on their SEC filings. So it's very painful. So definitely understand that with you. Um, cool. I feel like you actually had a great lead into the next question there, Danning. Um, and so like this would probably be really interesting for what you're doing at Pantera. Can you tell us a story where better data would have changed your call, either on like an investment thesis, a governance vote, or builder strategy, or maybe even like uh, anything else that's not in there? Uh, just curious what better data could have been available for you.
Yeah, I'm okay. Yeah, I'm still new to the role, but some stuff I've observed so far is that oftentimes when we're trying to look into if this project is taking adoption, we sometimes often see that okay, there are a growing trend of number of users or activities, but like because oftentimes these projects are when we are trying to considering the investment, it's early on, and oftentimes it's like before they even publicly announced the project, and so it's oftentimes still shared through their network. And so it's really hard to determine, okay, say when you see a growth trend, is it because word of mouth or is because you're distributing more referral code? And so in that case, like oftentimes you need to look further into say how user are onboarded. Is it through like a user friends referral code, or is it through like a how to say organic finding through like just social media, Twitter, or anywhere else? I think that will probably be a common like kind of question that I'm seeing from time to time for the investment kind of decision that we're trying to make. Yeah, I'm curious others answers on this too, especially Dobby's if you have the same request.
Yeah, Hildabi, what about from your point of view?
So I missed half the answer because my phone somehow Twitter died, but whatever. For me, I think the hardest is mostly the data fragmentation, where I'll find pieces of data, RWA stuff on RWA.xyz, but I'm also going to find, token unlocks on tokenomists, and everyone has their expertise and the data sets that they are the best at sharing. The hardest is putting it all together. I think as time goes, more and more these data sets play a role between one another, and it gets more interesting to have them interact and discover new things that way. So that's what I currently struggle with, and to remedy that, I guess I'm trying to bring a lot of things I tag and my data sets onto Dune because that's where I work on a lot of things, and hopefully other people can fetch those. So that collection work that I do hopefully is time safe for others that use my work afterwards.
Cool. And then Jake, do you have any story where metadata could have changed your call?
Yeah, I mean, I also echo similar points to Danny and Hildabi. When I was working at that crypto VC, one thing I underestimated was like how much early incentives distorted traction. So we were seeing, dashboards showing explosive growth. So user count up and to the right, TBO up and to the right, transactions up and to the right. And it looked like there was a product market fit, but I didn't have data on what would happen or the stickiness of that activity once the rewards ended. So better retention data would have changed my call, because once the farming incentives stopped, then all the user growth stopped, and then the protocol just seemed dead. That's also something harder to do when you're looking at very early stage projects, pre-seed, seed, because sometimes they don't even have user metrics, or they do, or when they do, it's really early, and it's just airdrop farmers. So somehow getting this retention metrics would have changed my call and whether we should have invested in that project or not.
It's very interesting. And unfortunately, we don't have Ludwig here from Ingstrom, so we're going to be moving on to some of the other questions. So we'll try to get him on for another Twitter Space here in a couple weeks.
Yeah. Let's just move on. So I think Jay's story is actually pretty good fit for the next question, which is we're gonna talk about like when metrics become gatekeepers, like in terms of legibility versus meaning. So like my question is like, how do metrics, dashboards, and labels become gatekeepers? And also, are we overfitting to what's legible rather than what's meaningful? So how about you start from here, Davi?
I would say yes from experience. I think when I try to manage a lot of dashboards and keep them up to date, but I can only do so much. So it's, not all my dashboards are constantly updated as I wish they were. And sometimes that leads to showcasing misleading information a little bit for a while until I fixed those. And the maintenance process is required basically on all dashboards. And so what you'll find is there's a lot of tools where those are not maintained and therefore become misleading over time, because they had, those were the places with, let's call it the mind share. That's where people would go to look for certain metrics, but eventually gets deprecated and, it's a slow death until it's replaced. So I think that's one thing. One example I have is for looking at staking again. Sorry, it's not MEV, I guess, but it's I tagged Coinbase as having like 15% share, but they're rotated addresses, and now I've tagged them as much less, although I know they still maintain 15%. And it used to be that a lot of people tweeted my data saying, "Oh, like they're the largest staking actor," and I don't see this at all anymore. So I'm guessing I might have a role there, and yeah, I need to go after them and see where else they have staked their ETH from. But yeah, so I can see how the data that is showcased on my dashboards sometimes impacts what the conclusions are from people who use those dashboards.
Okay, cool. Next, Jake.
Yeah, so one big gap I see in data and especially with dashboards and where they become gatekeepers is a lack of transparent off-chain data. And this is something that Danny mentioned earlier. And I see this especially with like RWAs. So, for example, Maker, Ondo, you see collateral on chain, but you don't know if these treasuries are safe or the legal structures are enforceable. So, these dashboards make the system look healthy, but they only show the tokenized representation, not what the off chain risks are. And I also see this similar with oracles like Chainlink or Pith. You see the feed is visible, but the sources could be manipulative. You don't really know what's being verified off chain. Um, and so the and especially those off-chain signals, they're not legible in dashboards, so users are left trusting a black box. So this is the case where an absence of meaningful data becomes like a real gatekeeper. But on the flip side of that, we are starting to see, like, for RWAs, for example, we're starting to see more real-time attestations, more proof of reserve efforts. um, and then on the Oracle side, Pith is letting data publishers sign price feeds at the source. And Chainlink, I know, is moving towards more source level transparency. So we are seeing more of these steps to making off-chain processes more verifiable. But that is something I see as almost a black box. And also, there's more infrastructure out there, more technology, ZK proofs, NPC TEs that kind of let you prove off-chain processes happen without revealing the sensitive data. So we are, trending towards a more verifiable, you know, system for off-chain data, but that is something I see as like a big black box, a big, gatekeeper.
Okay, off-chain data. Very good.
Yes.
Danny. Yeah. Okay.
Yeah, I think like easy target here to list would be like those people who are, listing about their growth, and but then when you look into it, it's like all, as Jake said, it's all before the rewards arrived. And one of the protocol we were looking at recently to study like if there's really PMF for this social protocol, it was like everything goes trending up to the right, but then right after TGE, it was just like gone. Like it was when I compare the numbers, it was 100x inflated before the TG. So it's all farming. Some other example would be when I think overall it's when someone who is using the data to tell a story they want to tell, kind of like cherry picking some charts that looks good for them, but not ignoring some other parts. Don't have really exact example for that, but I feel like that's pretty common as like a gatekeeping case as well. Another good one recently I've noticed, and I think everybody kind of complains all the time, is now we have so many data providers and like aggregator layers, or like, a lot of also research companies that are publishing their own metrics and dashboards. You then realize a lot of these are just like wrapping on top of each other. Like some maybe like a research company releasing these dashboards, but it's actually just like a front end wrapping on top of a Dune data, Or like recently I saw one on Twitter was like Artemis was quoting data, says it's from Electric Capital, about like I think some ecosystem reports, but I think they thought that was like maybe Ethereum or something, but then Electric actually it was quoting from like Bitcoin ecosystem. So just like people are wrapping data on top of each other, but sometimes taken out of context, and then it just goes, like kind of, and or there are other cases I've seen like people are quoting data like in loop. Pretty crazy.
Cool. Yeah, and I think just because Danny had asked for more insight from Brian and from BTCS, I'll give a quick answer to this. Some of the headaches as a public company is you have to be able to account for everything and pass an audit. So there's a lot of opportunities out there that public companies just can't even get involved in because there is no source of there's no like third party source of pricing for some of these things, or like the value of these tokens can't be guaranteed or verified by an auditing firm. And so that's painful, and that's something that's kind of I guess intrinsic in crypto, where not everything has a clear cut pricing model, or even just like a verified dashboard that tracks the current end of day pricing for different assets. Um, but that's it's more just related to DATs than anything else. And the other thing is, like I mentioned earlier, with the accounting, there's so many different, not like hoops to jump through, but just different accounting policies that both of them drastically change the way that the assets look on a balance sheet. Um, Even just from revenue and other income accounting of what the operations look like, and the way the traditional markets value companies is so different than the way that crypto teams value companies. So it's a very dynamic space. But Brian, you should give an update from Eigenfi for this answer as well.
Yeah, for sure. I think in terms of, I'll give one example. Like for example, when I was trying to compile the data regarding builder rewards or those kind of stuff, it's kind of like uh, very very simple example. It's really hard to keep all the builder labels in sync. To keep all the builder label in sync with the builder address, and it changes a lot. And also it can be like different builders have different addresses in different times. So this kind of stuff always causes a lot of trouble when you are trying to compile like very meaningful data to understand the whole thing of the MEV supply chain. So yeah, that would be like pretty hard stuff.
Yeah, that's definitely fair. I remember the everyone would base things off of relay scan, where like the profit data wasn't always the easiest thing, or like the most clear picture of profit with off-chain refund obligations. Where like the subsidy metric is probably a little bit more reliable of a metric on there, so it's hard to value full things with just relay scan. But moving forward onto the next question, how do flawed data assumptions create real governance problems, and what role should researchers and analysts play in upstreaming better metrics into DAO and protocol governance? Danny, you're queued up for the first response on this one.
Yeah, I think I would just say maybe a few aspects is like when people have to like vote on the proposal for the governance, it's really hard to like basically have a educated. First of all, like a lot of people probably is like not like something we learned from recent episode interviewing the entropy advisors data wizards is that like so first of all a lot of people who has the vote doesn't even delegate their votes, and the people then who delegate their votes probably is delegated to just a few parties. And I think like oftentimes people aren't really educated to vote on like should we spend this $100 million to like say support this gaming or some other like campaign or stuff. So I think oftentimes right now is just more like maybe not flawed data assumptions, but more just like thorough data modeling and like reasoning of why we should spend this amount of money for what kind of impact. Right now, it's mostly just kind of like a process for the process purpose. It's not really done in the way of like, say, even like in comparison, say you doing an A/B test of, hey, we want to like propose for this thing with a potential like end goal metrics, and hopefully if the metrics goes up by X, then we'll actually say this is significantly useful, and then we'll do the proposed plan actually in production. So I feel like governance could have used data better to make decision. That would be one of my take.
Awesome. Jake?
Yeah, I see flawed data or a misrepresentation of data in DAOs leading to flawed signals. So, for example, if DAOs assume wallet addresses equal unique participants, governance can look decentralized. And same with um, not just number of wallet addresses, but number of DAO tokens holdings. If a few whales control a majority, that can seem, and you know, that's not shown. It can seem like there's decentralization when there's not. And I think an example of this is what we saw that case on Polymarket, where with the Zelensky suit, where there was all of those news outlets were saying, yeah, Zelensky was wearing a suit, but the whales controlled the outcome of the Polymarket, and then it resolved to not wearing a suit, which actually ended up hurting the community. So a lot of times when decisions are made on metrics that seem legible but aren't meaningful, that doesn't actually reflect the community's true preferences. In the role researchers and analysts should play in upstreaming better metrics, I think that researchers and analysts, our role is serving as translators. So our role is to surface where common metrics are misleading and proposing alternatives that better capture these metrics. And by upstreaming these insights into DAO forums, community discussions on Twitter, etc., we help the protocols redesign their incentive structures and governance systems that are actually based on reality.
Yeah, that's really cool. Hildabi? We might have lost Hildabi. All right, let's just move on to the next question for now, and then we can come back to Hildavi if he's available.
Yeah, sure. Next question is like one metric you don't trust. So I want to start from Jake. Like, what is a widely used dashboard metric or insight that you think is misleading, and what should we look at instead?
Yeah, so for me, this might be controversial, but I don't fully trust TVL. I think TVL, first of all, it's price dependent. So if the underlying asset rallies, the TVL inflates, even if the user activity hasn't changed. So for example, if you're looking at SWE, and the underlying SWE token price increases in US dollars, then it looks like the TVL has gone up a bunch, when in reality, the underlying the amount of SWE TVL is the same, could be lower, or it doesn't translate as much to what we see in the increase of US dollars. And also, a lot of times TVL is that liquidity in TVL is opportunistic, so it just moves wherever the highest yields are. And like we've all been saying, once token incentives dry up, that capital leaves. So TVL looks impressive maybe while there's liquidity rewards or farming, or when the underlying token price moves up, but it doesn't really reflect, sticky usage. And instead, I like to look at protocol revenue. Obviously, this is not a perfect metric, and you can't use protocol revenue for all types of protocols or apps, etc. But I think it shows, real usage. It shows what users are actually willing to pay for the service, and it's not just capital sitting in a contract. So if a protocol can consistently generate fees, that's a much stronger indicator of PMF than just having a large TVL.
Yeah, very cool. So, Dobby, can you, is everything okay on your side now?
I think we're still waiting for him to rejoin as a speaker, so we'll have Danning go next, and then we'll
Yeah, sure.
up here.
Yeah, so actually, Jake, I think your answer is like great. It was kind of it was like actually connecting my points. My point is actually like revenue is great, but all these websites are reporting it in the wrong way. Like I just pulled up Uniswap on DeFi Llama, and fee says 2 billion, but revenue says zero, and it's like Uniswap as a project is not zero revenue. And so like I feel like most of this data platform are reporting revenue in the wrong way. Especially also when I was at Flashbots, we were battling with Token Terminal because they keep like trying to report Flashbots has a revenue of 500 million, which is the total of proposers' revenue that's sitting on top of MEV Boost. But everyone knows MEV Boost is an open source tool where Flashbots charge zero fee. So we're like, hey, can you take it down? But they refuse to. So I think like revenue is also just like a target here that I want to mention that it's a metrics I don't trust on all these like platform. Or I would verify it twice. Another one would be coming back to the DAT topic. One thing our team pointed out is that currently a bunch of websites that are listing DAT's metrics are pretty good, but in a sense that like the MNAV, like the way they are calculating the total market cap is misleading in the way that it's not even counting all the token warrants are like like the warrants that anyone can buy as a basically option with a strike price. One way we are like correcting it internally is that we're just assume whenever the stock price are going up your exercise price, then you will possibly exercise the stock, and then it will actually change the number of shares and like market cap and everything. So yeah, I think that's another metrics we generally like kind of not really trusting fully yet, hoping for better work to come out.
That's really interesting, Dan, and I also agree about the revenue. Revenue's like it's first of all, like you look at fees, which sometimes is not the same as revenue, and then a lot of times, expenses, operating expenses isn't calculated in. Sometimes, and different data platforms represent revenue in different ways. That's something that I think like the whole crypto community, we need to rally around and figure out what a good if there's a replacement for revenue. I know like GDP has been a proposal. So yeah, that's something that I think is super important. And I'm curious because I've looked at, for example, Blockworks data for MNAV for their enterprise value or MNAV market cap. And I'm curious, like if Pantera is looking at a way to maybe create a dashboard or a way to better reflect these MNAVs, as you're saying that if the current MNAV data
Yeah.
might be flawed.
Yeah, that's exactly the plan. We're and mostly the people who are, on top of like the expert of that is the Liquid team. So basically Cosmo and his team. And so we're learning a lot from them and trying to calibrate all these data yet. But it's coming up.
Cool. Very cool. So, Dobby, is everything okay on your side now?
Can you hear me now?
Yeah,
Yes.
absolutely.
Okay, yes. Okay, well, yeah, I was speaking earlier, but I guess in the void. Anyway, in terms of misleading metrics, I guess I'll go for the most simple one. I think it's a classic, but all the raw metrics that everyone kind of defaults to at first, which is people call it users, although it's active addresses, what is it, volume and TVL. I think all three have major caveats every time. For active addresses, obviously they don't represent users, and it should be it should be interesting to have a breakdown of what these active addresses are. Do they have bot-like behavior? Are they human? Are they seemingly human in terms of hours of trading or whatever? Then for TVL, you can't even compare Uniswap v2 to Uniswap v3 TVL because it's used in very different ways. So it doesn't even make sense to compare. So you would want to compare only across systems that are either very, very similar or the same, or across L2s that are very, very similar again. And then volume is also, there's wash trading all around, especially with incentive programs. And you should filter for this volume when possible, because teams will purposely choose the metrics that make them look best. You'll see all Twitter accounts from various protocols and teams publishing, the hockey stick charts. But if you actually go and look deeper, it doesn't look as pretty if you look at the whole story. And there's many, 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 many occasions like this where you'll spot, a Dune chart or something posted by a BD team that is a bit misleading.
Yeah, that's very cool. Yeah, I think the MNAV points you guys made are resonating very heavily with me. We talk about MNAV pretty frequently here at BTCS. The one thing that's really interesting is how obsessed people are with MNAV, where like they think every company should trade at one MNAV that's a DAT, which is kind of odd since like companies that are not like you think an ETF should trade at one MNAV. It would be a much healthier term, where like almost every DAT should trade at some multiple above MNAV, because they should be able to generate higher return on those assets than an ETF would be able to return. Because otherwise, a DAT is just an ETF with extra steps. So, the lack of availability and clear reporting of how many shares are outstanding or how many shares are issued that are accounted for in the MNAV is a very frustrating time. And then all you hear on stock twits, which I'm sure Danny and Jake, you guys are probably following stock twits a lot more often, is just people bitching about MNAV all day long. So it's a fun time. And Brian, what from EigenFi do you guys have to say with this one?
Yeah, I agree with Hugh W. I think volume is kind of like one of the metrics we should very be careful about. Like for example, like there's a very, very big like organization in Europe. They actually quoted our data in terms of the volumes of MEV in certain year. So first of all, the volume of MEV is kind of really hard to measure because like all the very complicated like interactions between different addresses and between different protocols. We still haven't figured out a very good way to do it. And in any case, although the other organization just quoted our data like says like hundreds of billions of volume in terms of MEV, so that would be like very surprising. So yeah, I will use volume as an example. Yeah.
One other addition to this question would be like very MEV specific things would be like the profit of the builder. But when all of us like have no idea what's the backdoor deal the builder has with the searchers, it's basically all inflating based on chain because the builder are able to say, okay, so the whole workflow works like the searcher will give a bundle to the builder and they will pay on chain this amount of money, and but that's not the total ending money that builder were able to keep. So the builder will get that amount of money. They will try to bid as least as possible to the proposer, and so after the proposer layer auction, builder was able to keep this amount of money, but off chain likely, or like probably even it's on chain but it's not associated with the same address, they're refunding back a bunch of like rebates to the searchers, and we don't know what's the percentage for those big builders with the searchers still are, and so we're basically over accounting their profits. So it's similar to, I guess, like if anywhere in the like the funnel when PFOF kind of like deal happens. So yeah, like that's one thing I want to add.
Yeah, plus we've actually seen it go both ways too, where there's other incentives for paying higher on the block where you can get kickbacks from different sources on there. So even the
Right.
subsidy is hard to measure with these things too, because you don't know where all all of the revenue comes from.
Right.
I liked Quasar Builder's tweet one time where they're like, what happens off chain stays off chain. But it's just not clear for everyone.
Yeah. And yeah, one other thing adjacent to this is like, maybe I'm like calling myself out, but when everybody is trying to measure the profits for searchers or basically arbitrageurs, like centralized exchange versus like people who are trading arbitrage against centralized exchange versus DEX, the best thing we can do right now, I think like the state of art is to basically use some kind of like Binance markout to assume that is the best time these searchers can hedge and like calculate the delta of like how much profits there are. But this assumption doesn't even count any of the price impact that they are creating. So it's like definitely overinflating the amount of money they're actually able to make.
Yeah, very interesting. All right. So we're two question. Well, this is the last question before the one sentence conclusion. But um, what are the norms or infra? Sorry, what norms or infra do we need to build next to keep data credible and non-manipulative? And we'll start with Danning.
Yeah, maybe following the thoughts around that. So, one thing I've been thinking about, I'm not sure if it's making sense because I'm also curious, Benjamin, your thoughts or anyone else, is that like, can we actually build the data standards to allow all these like public trading stock companies to report in real time or like just at more real time than 8K they're filing to SEC every other few days? How much like ETH holding are they having, and how many shares have they newly issued to like the institutional investors, and any other like information that they're willing to share. Like right now, these, how to say, even like the underlying assets part is getting more and more complicated because like I saw Bitmine bought another public company stocks, and then so it's getting like it's a combination, a bucket of like collateral now. And I could see maybe some other like DAT comes up with like a bucket of like Bitcoin and Ethereum and stuff. And like if they're also willing to share even a wallet address across different chain, for the asset they're holding. But I understand maybe that could be a security concern. When I shared this idea with teammates, they said maybe by law they have to report to SEC first rather than like reporting anything else to any other funnel for like the transparency of the market. So I'm curious if it's like even is a idea makes sense, but I would really love to see this happen.
Yeah, I think the challenge is that holding on to that information until the 8K, or sorry, the 10K or the 8K, whichever one you want to use for it, is going to be kind of like an edge that the company has. Either like that they have underperformed and they're holding on to that, or they have overperformed and the way that they overperformed would be visible and they don't want to show that. Um, like one of the things that Charles talks about a lot is like a lot of our playbook gets copied pretty often. Like one DAT's investor deck is almost like a copy paste of our investor deck, and just like they just change like maybe 5 or 6 things on there, um, which is, I mean, it's fair, it's like they just want to do what we're doing, but then they get a lot more hype than we do, and it's a little frustrating. So it's more of like you hold the numbers close to heart because you don't want the competition to see it. Uh, but what I think would be even better than just getting real time reporting is having these public companies work together on classifying these assets the same way. Um, like going back to the liquid staking tokens, the way that Aspet accounted for them, it's misrepresenting of the value to shareholders or to investors. You don't want to see a $83 million loss and there's actually an over $1 billion profit on the actual assets. Um, I'm not saying that they're misrepresenting their filings. I just think that if we all work together and we're all actually in communication about these kind of things, we could work together with the SEC to create these standards before jumping the gun on something like this. So, not too sure about real time. It's definitely possible. Uh, like there's a whole filing you can do so you can tweet in PMI instead of having to go through an 8K. So it's definitely possible to get real time on there.
Yeah, yeah, thanks. That's very interesting. One other point maybe worth mentioning is like I think it's still there's a huge gap between how interpretable the data are versus like how they're being presented right now. Like I feel like LLM or like, crypto data LLM could be very helpful here. Like say if I go to Etherscan, I guess like there's some sort of product existing in some form already. Like say I remember some people were showing me this new browser in replacement of Arc and Chrome, where it's like native LLM where you can define skills and to basically ask it to interpret everything. So now if you go to Etherscan, likely you can basically just like type some command and be like, explain me what it is. But I think underlyingly, if having it to be able to interpret data well still needs maybe some crypto data interpretation engine. So that's that. And well, another thing everybody complain about would be Solana data. And I think Solana data also is just hard because there are some like translation layer that's missing that can map the data well and to be queried more efficiently. So yeah.
Awesome. We're working on getting Hildavi back online for a speaker again. So Jake, could you provide an answer to the what norms or info do we need to build to keep data credible and non-manipulative?
Yeah, for sure. So yeah, I think this is kind of going back to what Hildabi said in the last question, but like for norms, we need something to measure real activity. So instead of like protocols optimizing for TVL or wallet counts, there should be some sustainable metrics. And I like what Hildabi said, something about, maybe trying to tag or flag accounts with um, you know, that flags them as a real user. So not the different types of transactions, how long they've had the account, what the transactions are, the amount they're sending back, what applications they're interacting with. This might have to be something like Danning said, like some AI or LLM that is able to flag this, underlying on Etherscan. But that would be really cool, and I think that would help a lot to see what the real activity is. Um, versus just us like using inflated metrics that make the protocols look good and healthy on the dashboards, but in reality there's not. There's 5 people running bots instead of 5,000 as the dashboards show. And for infrastructure, we need some sort of shared infrastructure for data integrity. So we need standardized attestations for things like reserves and data feeds, like I was mentioning earlier, verifiable computation, so off-chain processes can be shown, and independent attestation networks instead of the attestations coming from the protocols themselves. So we need some sort of equivalent to GAAP, the generally accepted accounting principles, these standards, but for crypto. So everyone's reporting data in the same consistent and verifiable way.
Awesome. Hildabe?
Hello, can you hear me?
Yes.
Okay, great.
Oh, I think I might have just muted you on accident. My bad.
Hello. Oh yeah,
Yep,
my
yep.
bad.
Sorry.
Yeah, I'm back. Okay. For me, one of the main thing is the data fragmentation bit. When someone publishes, anything, I think the first question should be how is this data obtained? What are the considerations? Was it you using raw data? Was it you pulling from another site? Which sites were used? Because a lot of things get lost through that kind of process, and maybe there should be some tool to prove that this data was obtained in some way, and therefore the reader has more context about what is actually being shown, and can come up with his own conclusion based on that. Yeah, I think that would be a big solve, and would allow for much better, let's call it, interop across different data sites and data sources. Um, some collaboration across all these data sources so that they're more easily integratable, and also better practices so that people don't just say, hey, this comes from this website, or this is from Dune, which doesn't mean anything. Uh, or it should be very easy to directly go to the sources used and not necessarily redo the whole work yourself as a check, but have a really good understanding of how it was put together. That would make me much more trustworthy of the data. even when I look on Dune at dashboards and I see that all queries are private, it's not it's more of a red flag than a green one.
Brian, is there anything from your end about on EigenPhi where you guys think we could add some more credibility or non-manipulative features to the data available?
Yeah, I think this could be a hot take. I think maybe all the builders should review like their relationship to their search bots. Uh, so yeah, I mean that would like kind of like review all the like hidden the biggest hidden like profiteers out of this MEV supply chain, which are the search builder integrators. That'd be very. It's kind of like the in the sports, you cannot be a referee and a player at the same time. So I think this data could be like very good for the whole ecosystem. Yeah. Okay. What about you, Ben? What do you think of this question?
Yeah, I mean, I think there's a lot of like research going on right now in the TE space, the ZK space, which is like I know they're years out from actually um, being available. But I think that some of the permissionless execution of transactions and some of like the ZK behavior can even allow for uh, exposure of data in ways before it can be exploited, or in ways that it can't be exploited, so that we might even see certain auctions that are closed now going into more of a public auction space. Even things such as like Uniswap X, some of the bids over there, as long as they can't be exploited, I think they'd be open to sharing that information to people on the solving. But I think it's all pie in the sky right now until we can get a lot more development done on the ZK side for those things. Um, but yeah, I guess I feel like that's not really that's more of a non-answer than anything else. So I apologize.
No, very cool. Yeah. All right. The time is almost up. It's the last part of this Twitter space, which is a one sentence conclusion. So please give us one sentence that you want our audience to take home today. Let's start from Jake.
Yeah, so one sentence, dashboards make it easy to say, what you think is real, what's easy, and what's legible. But the insights come from determining whether the growth and governance we see is actually sustainable and will last outside of farming rewards and incentives.
Good, very good. Next one here, Dobby.
My one sentence would be that when you're looking at data, try to go one step deeper and understanding the data rather than just seeing what's shown and how it was together. Maybe even message the builders of that dashboard or whatever to get more context and a more thorough understanding of how the data came to be.
Okay, Danny.
I have yeah, so I think maybe one thing would be like building public and learn together, which is like, whenever there's new topic come up and people are coming up with frontier pioneering, dashboards, but some stuff could be not very mature, the metrics being built. I think like the good way to build a reputation actually is to admit your mistake and like just learn from people's feedback and like build for better. And I mean, no hard feeling for anybody when things are like wrong. I think all of us probably posted like chart crime before, and I think that's a better way to like take it and like improve from there. Maybe one other thing I want to mention is like maybe my opinion of what are the popular data to analyze would be two things. One is like we're in this cycle, everything that are popular is basically related to how stock market or traditional finance market are getting connected with crypto, getting exposure on chain, or vice versa. So I feel like leveraging that and like trying to index stock markets data could be an edge. As in, like I feel like it not only that, but also like tokenized security or on-chain stocks. All these things will use those like SEC data. So that's probably a good thing to do to have a lot of output. One other alpha maybe, I don't know, is like I think prover market is coming up, as like a few of you already mentioned, like ZK prover, and like I think EF might have set this roadmap in like their meeting in Berlin, where they are trying to push or experiment like ZKVM in the next few hard forks. So I saw like Succinct is live now. They have this dashboards about pro market. They're trying to grow the network. And so I feel like that's another very interesting research topic as well.
Okay, cool. I do see Ludwig is here. It's also it's a little bit late for the party. So Ludwig, can you hear us?
Yeah, I can hear you guys. Sorry about that.
Okay, no worries. Yeah, I think at last last but not least, you can give us one sentence that you want our audience to take home today in terms of data and Ethereum. Yeah.
Yeah, I think like my biggest kind of insight on like DeFi specific data is you need to be like refreshing your view on the data that you're sourcing basically all the time. And if you're not keeping up with all of the newer protocols, your data just very rapidly becomes incomplete, and you can tell yourself lies and stories that are just no longer a reflection of the actual reality. I think you see this a lot with like order flow wars and like looking at, okay, which DEX is dominant, what are the major players. This is something we've had like a little bit of experience with. If you don't, integrate the latest DEX, if you don't integrate the, the brand new thing, then very quickly, what seemed like the dominant player is no longer and is barely being that important.
All right, cool. That's a very good wrap up. Okay, it's already been an hour. Thank you guys for being here. Give us all these insights about data and Ethereum. Hopefully we're gonna do more about like very specific topics in terms of data. Hope everyone can join us like in the future to give us more insights and all very valuable information in terms of these topics. Okay, thank you guys.
Thank you guys. Thanks for hopping on.
Thank you.
Thank you.